every time we go through these cycles, more and more people understand what the benefit is of Bitcoin. And now we've got 300 million people that have used Bitcoin and other crypto. The next time around, it'll be 1 billion people or 600 million people or whatever the number is. And those people will have been awoken to the fact that there is another way out of this. Now, the issue is, as we all know, is Bitcoin is extremely volatile. So it's very hard to think of it in terms of, well, it's a wealth preservation asset because people's time horizon is too short. But if you hold it long enough, it does extremely well. It does better than the Fed balance sheet, better than any other asset in existence. But people get freaked out by the up and down move. But if they just zoomed out, they see it does a phenomenal job at opting out of the financial system over time. But, maybe you need to keep liquidity and other stuff for when you need it, as opposed to the crypto cycle, which can be quite vicious. If we go back to our conversation earlier about bank runs, and we said, you either kind of guarantee the system or you try and throttle it. My view is the US understands crypto, understands that it is the answer to the future, but they need to throttle it because if you create the bank run on the entire system, then the unintended consequences are simply gigantic. It's kind of everybody losing their jobs, the entire system breaking apart, the entire system of the United States as being the world leader, or Europe, and all of this falls apart. They don't want that, but I think they understand that there is a future here, but there's a battle to get people across because some people can't stand it, they don't like the idea of it, other people understand it but don't want it to happen too fast, and I get that. So I think that there will be an ongoing war. And if Balaji gets across what he wants to do, which is get more people to move out of the system into the Bitcoin market, we'll see the pushback coming. But it happens very quickly because the mob is pretty fast, as we know. And the mob with a hive mind who's deciding, let's go to the parallel financial system, they can move really fast. So the government's going to try and stop it. But, they do have, as Punk 6529 talks about, there is a freedom to transact here. You need the ability to do that. And if they go against that, then they're really trying to change the political spectrum entirely. And I think that the pushback would be so gigantic, but it is going to be a fight. But within this fight is a bigger world. The US has been down this route before. It tends to get self-protectory at various points. So after after Nixon left the gold standard, the US essentially had capital controls, and foreigners wanted dollars and they couldn't get them. And the flow of dollars and foreign exchange was restricted by the US because they were protective. So what happened was England came up and went, well, we're going to have the FX market here because we don't have the same regulatory issues. We will create regulation to allow it to come, and it became the biggest market on earth. They then innovated again and basically invented the Eurodollar market, and London was the center of the Eurodollar market. The Eurodollars are all dollars that are traded that are outside the US system, and it's gigantic. It's much bigger than the US system itself, and that came out of London, and then it spread to global centers, but London was always the epicenter. Then after that came the derivative market. The US had its listed derivatives, and it didn't want the banks to get involved with structured products and OTC derivatives and all of this stuff. The swaps market, the whole lot, all went to London because London said, we'll change the regulation to get this. So London was the largest financial center in the world by a big margin for a long time. Then comes Brexit, and then comes Basel III. The US cheats on Basel III and says, we're only going to let the big banks have to be regulated in this way so they can't fail. But the small banks, they can do what they want. Guess what? Suddenly it blows up. Europeans forced Basel III on everybody, as did the UK. So they don't have some of the same issues. They've got different issues, obviously. So that whole mechanism, plus Brexit, meant that the world's capital markets went back to New York. And they've been in New York for the last 10 years or so. But the UK is looking like it wants to regulate crypto in a very sensible way. They understand regulatory arbitrage better than any country on earth. You see, once the US screws up and misses an opportunity, the UK has the rule of law, the language, the ability for Americans to go and live and work there. It's a global capital center. It's connected with Singapore, the Cayman Islands, Hong Kong, the UAE, all of the places that matter. It has a broader relationship on a less aggressive policy. So my guess is we don't know whether this government will last in the UK or not. But if it does, the UK will probably eat the US's lunch. And we'll see Coinbase, we'll see Kraken, we'll see Circle, we'll see everybody relocating to the UK because it's an easy change to have. And don't forget, this is $1 trillion industry. It's $3 trillion at peak. What's it going to be at next peak? 5, 10 trillion, probably. So, of course, the UK wants it because it's lost relevancy. So the US has to be very careful what it does here. I don't think it stops the people, per se, getting involved. I think it tries to regulate that. That's all well and good. I think it's trying to stop the infrastructure layer being built and becoming too powerful, too decentralized. So they can regulate Coinbase and maybe they can regulate Circle, but they don't want too many moving parts in all of this. But if that's the case, if they're too heavy-handed, in a global world, that capital's going to flow elsewhere. And then every pension fund, sovereign wealth fund, hedge fund, anybody else wanting to do business in cryptocurrencies will go to London and they'll go to Singapore, they'll go to the UAE, they'll go to Hong Kong. That's the way the world works. They don't need to hold reserves. They're the world's reserve currency. They just print dollars and build gunships and space rockets. So no, they don't need this. Do other countries do this? For sure. You know, we've seen it. And we know the Middle East and others have woken up to this because of what happened to their the Russian dollar reserves. So other countries may be incentivized to do it, but it's a very volatile asset. So really, and I've talked about this in the past, sovereign wealth funds, it fits better in than it fits in bank treasuries because it's just in central bank treasuries because it's so volatile. So I don't think the US does it. More contentious question is, who owns all of that Satoshi Nakamoto stuff? My theory has been from day one that this was a combination of the GCHQ in the UK and the NSA in the US that built this. I mean, I spoke to the Department of Defense several times over the years, and they don't know where Bitcoin came from, but they kind of are open to the idea that it came as a parallel system that was built as a just in case by state actors themselves, knowing that it's decentralized, but if they can play a central role in it, it's okay. So I don't know, maybe that's the stake that they already own. Who knows? So at a top level macro position, I haven't cashed out of a single penny of crypto. And all I've done is use the cycle when the liquidity cycle hits the long-term uptrend that started happening in June of last year to just add to my positions. That's all I've done. Now, there are some trading opportunities around like bonds, because I think bond yields go from 4% to 1.5%. So can you make money? Will you make more money in crypto? For sure. But people don't want the risk, and people are such dicks online about the kind of risk you have to run to do it, that yes, there's traditional answers. You could buy gold, you can buy bonds, you can probably buy technology stocks, or you can buy crypto. And you skin the cat any way you want it in terms of what risk profile. And I've talked about my risk profile is, you know, I have income, I have assets that are paid for, so I can take more risk with the liquidity that I have. You know, I don't do VC because I don't like a 13-year payout. I like to be in control. I'm a hedge fund guy at heart, so I like to be in control of my liquidity. And so I haven't changed anything at all in terms of my asset allocation apart from increasing it and using the leverage. So why am I doing this? And this is really important for people to understand. So I first bought Bitcoin at $200 in 2013. It went straight up to $1,000. And I'm like, I'm clearly George Soros. I'm the best investor the world's ever seen. 500% in 3 months. I'm a genius. It then falls 87%. And my time horizon was like 5 years plus. So I'm like, well, probably 10 years. Because I wrote that first ever macroeconomic strategy paper about Bitcoin in 2013. So I said, okay, fine. So it's a call option. I'll let it go up and down. So it fell. Didn't do anything. Watched it. It rose. 2017. I got confused over the staking wars, the forking wars, and I'm like, I don't know what's going on here. I'm going to take my money out, and I sold out at something like $2,000. So I've made 10 times my money. One of the best bets I'd ever made, and watched it. Now I was still interested in crypto, but I thought it was in a bubble, and it was. It shot up 10x more to 20,000, then collapsed 85% or 82%, whatever it did that time around, and then I bought it again really well in kind of April 2020 when it fell into the middle of the wedge pattern. I bought it right at the right level. I didn't get the absolute low, but let's say I got in about 6,500, and then I put in a much bigger bet than I did first time around, and great. So I went back recently and looked at it and thought, what happens if I just kept my original $200 in its original size? Because it looked like I traded it really well. I bought it here, I sold it here, and then bought it there. Problem is the here's and there's were all higher because I sold at 2,000 and bought back in at 6.5. I fucked the whole thing up. Really, if I just held it, I'd have made 5 times as much money. And then the real magic unfolded is if I use the liquidity cycles and bought them every time we've had that kind of M2 fall down, M2 growth fall down, global M2 growth, bringing it back to the long-term uptrend, and you just bought then, i.e. the crypto winters, even if you just missed the low by 30%, maybe more, I still would have done over 20 times better. Even accounting for the fact I put a lot more in April 2020. So I've learned, many of us are having to learn how to trade a exponential asset that's in a logarithmic uptrend that is cyclical. But that's how I just deal with it now. I just use that simple framework. Is the adoption going on? And where are we in the liquidity cycle? And just use that. My general thesis is the market's going to be squeezier than people expect. So I think we probably get to 50,000 faster than most people expect. When that is it this year? Is it within 12 months? Probably. Don't know. And over time, we just keep the adoption curve and it keeps going. So, where does it go at the peak of this cycle? I don't know. Again, I don't want to be hung by dicks online for all of this, but, over time, does it take out 100,000? Does it take it 250,000? Of course it does. It's just a matter of when. And the timing part is the red herring. If you've got a long enough time horizon and the trend rate of adoption and the rise in the price of the asset over time beats all other assets, you're under no motivation to do anything else but hold.